Greetings, market rebels, and welcome to this week's macro measure. It is Sunday, November 12th, 2023. I'm Wayne, and it is about 10 after 1 p.m. here on the East Coast. I'm going to confess as I flash a disclaimer, etc. For some reason, I don't know if I'm getting adult onset ADD. I just can't process everything that's out there. Whatever the case may be, we are going to have to strap in for a pretty tough macro measure this week. Here's our trusty intellectual property rights notice from Market Rebellion. If you wouldn't mind memorizing that quickly, thank you. And then here is this week's stream, which I'm going to leave up there. And so I apologize. First off, let me apologize for flubbing up last week's stream. I don't know what I did. There might have been something I did, like a reversal out of a mistake, or I overdid something and it wasn't altogether accurate, but I was under time pressure and other issues with tech, which I'm still sort of dealing with, even though things have improved. So sorry about that, gang. The other thing is that I'm trying to cut this down a little bit too, but I just can't even. It just this is definitely, I can see why television networks have teams that concentrate on things, just because trying to really incorporate everything that should be mentioned is very tough to do in a concise video and without having to put in a ton of time. I already put in a lot of time, and I just am under pressure from my lovely wife, who wants me to help her with some new furniture and things like that. And anyway, this is this week's stream, so I'm gotta roll through this stuff to a certain degree, because otherwise she'll be even less happy, which is never a good thing for anyone that's been married. Anyone that's been married for decades knows that. Anyway, there's the last week's stream, which again was somewhat flubbed up. But let me get back to this week's stream. And what I'm going to do is skip to here for now. If you can see my pointer on the screen, it's all the way down at the bottom line. Save your time. So if you really want something that's pound the table-ish, it's not going to be this week for sure. And I think that's what the video is really going to demonstrate in short order, as short order as I can get it. There's a lot of stuff out there, but I'm going to even talk about the best thing I think I'll say is really general comments whenever they occur towards the end, somewhere where it seems appropriate. But that'll be sort of some of these bottom line comments. I think these are very important to experienced people that are still not where they want to be, and just even someone like myself that's been doing this for so long, and certainly for newer folks, because the more and more I go through the process of just approaching the markets, the more and more I realize that really it's you can do all that you want and say all that you want and do and investigate this, that, and the other thing, but really, and some people would say, well, no, it's actually tracing out exactly like I thought. And maybe it is for them, but I think if you're sort of doing this, what I would call nuts and bolts charting, and focusing on things in more of a direct, sort of basic conventional way, the way we often do, stuff that helps you make decisions quickly in a short time frame, right? When you need to. This stuff is a little bit, it's a little bit maybe less predictive and just more reflective of conditions. And I think that's really what we have to stick with. We definitely have to stick with that in my mind for now, because there's a lot of, you can argue in both directions, right? So that's what I'm going to pretty much do. Let's quickly switch over to let me switch over to another screen here, and I'll stop sharing this one. I think what I'm going to do is give us the quick check on, well, it won't let me do that without doing that. Let me see if I can get it to take down the one. There it goes. And I'll get rid of this and move it over here for now. So what I'm going to do is really talk about the screen share that we're doing here. This should be recording, and I think it is. You can see this is really, these are the cues, and I'll come back to this. That's not the one I want. This is the one I want. But this is the basic chart that we use quite a bit of the time. And coming into last week, I was thinking that things needed to take a breather, and that you would wait to see where you got a pullback. And if it was a higher pullback, right? In other words, we didn't go all the way back down to the low side of this channel. I'm not sure, there was a channel line that I had on there. I'm not sure what happened to it. We just add it back in real quick on the cues, but I'm just not going to worry about, oh, I'm on the wrong thing. Great. I thought I was in trend line, but let's get this done. My goodness, just ballparking it. I'm not even going to clean it up the way I should, but you get the idea. So we weren't going to, I wasn't expecting it to come all the way back down to here. Doesn't mean it couldn't have. I was looking really most likely that what it would do is probably try to put in a higher low. So maybe pull back a little bit, maybe to the 50, maybe to the 20 there in light blue. And then we would see what happens. Does it hold and they try to go again? Remember, we talked about what I call the base camp, where you kind of set up a new base camp from a higher level, right? Sort of. I'm not a climber, so I'm not really basing it off of that. I'm just saying, instead of coming all the way back down here and making a long run like you did here, you kind of move your camp your camp of support a lot closer. And then if you dawdle around for a session or two, it takes the overboughtness out. And then you really don't have to expend that much energy to get to where the resistance is and bust through. And so that happened actually in a lot of places, but it did not happen really so much in the Qs and the SPY. So that's why, right, even if you kind of have a good sense on what is probably going to happen, it can just be a little bit different than what you thought. And SPY maybe shows it a little bit better, where they did, of course, carry the momentum on somehow even further for the first couple of sessions. But then with Wednesday and Thursday, you finally had that sort of pullback to the 50 there in gold. And then, of course, they went haywire with whatever they were doing, gamma squeezing, whatever the was really propelling things on Friday. And you're right near, right, the Qs are a little ahead, but you're right near this kind of big area of resistance in the SPY. And I think there's another important line, that you could hit if they continue to push up in here. Let's ballpark that, since we're talking about it, at about 446. So that would be right. If they do bust through, I would be surprised if it just keeps going, but you never know. You have no idea what news can develop. But somewhere around 445, 446 would be another spot where this line comes in. And this line's been respected. And so that blue line I highlighted for that reason, and I would just keep that in mind if we do bust through. But this is kind of the base cap concept, where you finally do pull back, you take some of that really frothy, sort of all those frothy readings, and you knock them down decently, and then you go again. Now, will this be able, now that it did that, to be able to push through here? Well, the problem is that you're short-term overbought on some of the heavier duty intraday charts. And so I'll throw an RSI out there, for example. So the 2-hour RSI that I have is about 72 right now. So I don't consider the 2-hour chump change. I think it's got a little weight and substance to it. And so for me, like, that's overbought. It's certainly, like, technically overbought, but it's overbought. And I definitely wouldn't rule out that there could be more, but it probably would have been better for bulls to back things like that in the daily off a little bit more and then go. But remember, I think what's happening here really is a lot, which we discussed last week. And I think we talked about it even on Cocktail and other things, that I think it's sort of like the market internal plumbing. I think we talked about that last week. And I think you've seen it on the slide, right, with the stream, with this week's stream slide, where I think they've got a lot of people really, let's say, poorly positioned or ill-footed in this market. And so there's not only, right, are many maybe not long enough that are worried now about an end of year jam job, right, that puts the third presidential year in that presidential cycle right back on track, kind of like perfect clockwork, nearly, right, which was a miraculous save at the end of October is what allowed that to happen, I think. But this is why I'm talking about being proactively reactive or reactively proactive, which I'll get to later in this discussion. but that's the thing. Now, I feel like if they backed off more, it would have been better for them, but it's also not really that overdone. If you look at the SPY on just a couple of other time frames, which are daily, which is pretty much the base time frame for me, and I think a lot of people, you're at 62. It's getting there, but certainly it could get above there, and that wouldn't be a problem. And more so, the weekly is only 55, right? So it's there if they want it. And I think the fact that they've got so many people, as I said, poorly positioned, they've got so many people that are stuck in these short positions that haven't covered. They've got buybacks on the way. They've got the Fed seemingly going to chill. All these things, and they've got their seasonality. They've got the third year of the presidential cycle. All these things, right, are now are there in the support of the shenanigans and the end of year shenanigans. And the main issues that would argue against those, that would kind of prove it, would be sort of like the TNX and yields and the dollar, right? And if you look at those, we'll jump to those. If we look at those quickly here, just on the basic chart, they're not really looking like anything special at the moment, like they're about to really start causing big trouble. Sure, you have a pullback to the trend, the 50 days there, the gold line. That's, if you hold here and you go higher, I don't think it's good for equities. But at the same time, you could definitely have a lower high in here, and you could break these lows, and you could be trading down to the 100 there in white. So to me, this is really not anything that's incredibly worrisome at the moment. I mean, I think you have to keep an eye on it. I've been saying that for a couple of years now. This is the big focus. But the dollar too kind of had a little bit of a milquetoast sort of week. You can see that a lot of the dollar SMAs, the shorter term ones, are rolling over. They're about to cross below the 50 there in gold. So a lot of people are 2050 devotees. They like to keep an eye on that relationship, and that looks like it's on the cusp of turning sour. So if the dollar is going to be under pressure, maybe, and yields are not taking out and making new highs, and the VIX has its tail between its legs like it typically has over the past past few years since the massive COVID spike. It's had a really rough time getting moving at times, other than going all the way back to here. So it's looking rough for the VIX at the moment, right, where that could really start plunging even further. So that's also on the verge of rolling down to here. So if you see that happening, you see the dollar under pressure. These are the watches I've got on this week's stream slide that you may have taken a picture of already. So that's what I would keep in mind. Those three things just rolling over are an issue. So let's go through things a little more methodically, but that's really what I'm seeing. And at the same time, what I would say is, to counterbalance the fact that things look pretty good in SPYs and Qs, and I can definitely see a really strong finish to the year. It's there if they can break free in the SPYs, and they're not too far from being able to do that. It might not be a smooth path because, again, things are a little overbought here and there. For example, you've got a 75 on the 2-hour in the Qs, but that sort of get through resistance and then hold above your resistance after you kind of take a little bit of the froth off for a couple of sessions and then go again. That is almost like textbook ideal behavior if you want to really believe you're in a strong bullish phase that's going to be a breakout. And remember, this is why this is so hard to do in a short period of time. But remember, we've been flashing this sort of cup and handly thing that they've got going on in some of these charts, in the Qs and the SPYs, other places. I think SMH is another one. And, this is why I would say we have another instance of where you have to be really wary of a false breakout or a failure to fire. And we talked about that. I think my best illustration recently that I highlighted before it happened, we were talking about that as a possibility You don't know for sure, which is why you can still trade it as if you really do think there's going to be a breakdown. But the argument we were making down here is if they made new lows, broke down below the support on that line that I had there, right, you could get a real breakdown, and the gap that everybody, their brother, the horse they rode in on, the whole works, was waiting for to be closed, could be on its way to getting closed finally. Who knows what lies in store? You just don't know. Maybe, right, maybe it's under pressure there, and then really awful news developments from around the globe start to hit the tape. And then you do get more selling, instant kind of knee-jerk selling, and you get that. So you just never know. But this is why I'm kind of jumping ahead. This is why if you go to the bottom line and you look at what I wrote about being the first line, save your time. I'm going to basically be making points and counterpoints. It's just not easy out here right now. And I'm kind of imploring people to consider to avoiding predictive traps. I have regrets in my career where as I spoke with people, read about things, started getting into things more and more. I started to fall right in line with everyone that likes to make predictions, and thought it was all about making predictions. And then when I tried to really meld that in with being a trader with a directional bias, I found it to be very difficult to consistently be successful, because I was more, instead of focusing on what was really going on, what was happening, what the possibilities were, I was trying to figure out why my forecast didn't work. And what I realized was that there's always the possibility that you could be right or wrong, and you should really capitalize on that instead of feeling like, okay, I'm wrong, I deserve to get smoked, right? Or that blew up in my face because my prediction was wrong. There's still an opportunity there, but you've got to pull your head out of sort of wallowing in your own sorrow of like, how did I get this wrong? And so that's why people have heard me say, especially on this SMH recently, you got to be really careful. I wrote this in Ideas too, really careful if this does not break down. Now, I did not know that this is what they would do, right? This is really sort of an extraordinary, sort of exacerbated situation, I think, due to market conditions, the market internal plumbing, as we've been calling it, that a lot of people call it. And that's why you get this. But this is literally what I was getting at. It just happens to be a tremendous illustration that we covered in real time, sort of, right? Because we've been talking about this. But this is exactly why you have to be disciplined. I don't know what else I can say other than I fell into the predictive trap. What you really should realize is there could be this is how I looked at it a couple of years later that was way more effective. This could be a breakdown. It could also be a false breakdown. So everyone probably gets tired of hearing me remind people, watch out for the false breakout, watch out for the false breakdown, whatever the case may be. But the reason I'm saying that is not just because I don't want to see people get smoked. It's because you also, if you're really a mercenary trader and you just don't care, which I think it's better to be that way, about where you can make money and how, you're just about making money and doing it smartly. You have to realize that there's an opportunity here in both directions, even as this thing's breaking down. Even as this is breaking down, you should be thinking, okay, this might not work. Where am I going to really cry uncle if my bearish position doesn't work? Is it closing above these highs? Where is it? Is it reversing back up above the open of the day? Is it holding above the 200 there in purple? Take your pick, whatever you want. But whatever the case may be, not only, right, is it good to be thinking that way, but it could also set you up for saying, okay, there's a really good chance with what happened here with this kind of reversal candle that formed and what they were able to do, that these guys may actually be able to jam this thing up somewhat. Would I think that it would go nearly all the way up to this Bollinger Band, right, over the next, let's say, 8 sessions? Probably not. 8 or 9, I don't know. But I would have thought, yeah, the 100 is certainly possible the way these guys operate, and just visually, you can see that. So that's really what I'm getting at with that. Probably the most important thing that is in this week for people, especially that are new, is that you should be you should realize this is what I mean by proactively reactive, or you call it whatever you want, reactively proactive. Just be ready, right? Have these sort of scenarios. I've always said this, have these scenarios in your mind as to what could happen. And then even if you have to sort of take your little hit right there and say, all right, well, there's, you got to just look at it and say, there's might, not only is this not working, but I might have to really think about, could there be an opportunity to the upside now based on what these guys have deftly manufactured here, which is what they almost always do. And I've said it many times in these videos. These guys are great at barely exceeding key lows or highs that everyone's watching, and then pulling the rug the other way. That's really what they're great at, and that's why you have to be so careful when you're at this kind of a juncture and it's really obvious and really a lot of things are screaming the bottom should fall out, because I would say probably they rescue it far more than 50% of the time. And therefore that should almost put the light bulb over your head and say, well, if they rescue it more than 50% of the time, not only do I really have to be disciplined, but I really should be considering the reversal side of this, right? Because that's when they're really putting the screws to the shorts. Remember, they probably drew a lot of people in here. These lows over here, all this churning over here was right below, right, the prior low. And people were probably thinking this thing can't get off the mat no matter what happens. And it's true. And when you're in the moment, you have to think this really could break down. But remember what we said about Bollingers? You were below the lower Bollinger. You were below the lower Bollinger for a while. And so what typically happens once they arrest that downside momentum is you typically spring back into the Bollinger somehow. Now, how far it can carry varies, right, depending on, the different sort of patterns that are there. I think other technical factors, what the market's doing, sectors are doing, the news. There's obviously a myriad of factors that you would have to cover there to really talk about that. But that's really the best thing that I think I can share with everyone this week, because the rest of this is looking at it and saying, let's do this, because this is really a different kind of approach than we use. But I think it's appropriate. And I set this up on here, and I'm not going to go through all these sectors. This really is a sector situation discussion. But just notice, right, that a lot of these sectors still really haven't broken out. XLF hasn't broken out. A lot of these things are not really looking all that great, although they are maybe on their way to coming up through resistance. But look how far down you are visually in XLI, in XLB. In you're way down here in discretionary. You're way off the highest highs, right? So a lot of key sectors, transports too, a lot of key sectors have not looked very good yet. And yet, if you look over here at XLC and you look over here at XLK, that's where you see that those are leading, right? Those, the SMH, Qs, this is all these are the leading sectors. And that's what's pulling up so many things, which is not news. I mean, everyone's that's paying attention, I think, has seen someone discussing this or noticed it on their own. But that's really, those are the lead sled dogs. They've been the lead sled dogs. They sort of remain the lead sled dogs. And everything that we said, which was keep your eyes on, right, some of those Mag 7 charts. And we had a lot of Mag 7 ideas in here. And I've got this up here and we're going to chart it right now. And they really had, let's see, I'm kind of doing it out of order. I usually do it in alphabetical. Let me see if I can get Microsoft. Meta should be in front of that, but I'm kind of trying to rush my way through here so we get moving along. There should be some lines on here. Yeah, they're on there, so that's good. At least it's got that. But those, right? That's what we were talking about. I think we specifically talked about Apple last week. We had Apple as an idea. We had as what that could do for the market. We had Microsoft, Amazon as ideas this week. Tesla to the downside even was a good idea. I don't think we had NVIDIA this week. And I don't remember, maybe we had Meta, but I'm not sure what service that one was in. But look, this just pushed through. Now, the problem right now is that It's at 70. I'd say right now it's at about 74, 75 on the 2-hour RSI. So again, that is not the end of the world, but if you're getting in now, you're entering at a time when you're already overbought on a time frame that I would say is not chump change. So I do think that certainly these things can continue to move back up and go, and you could see that you're almost really on the verge of a breakout right now. It's just that if you're a bull, ideally you'd rather see this again come up to here, back off a little bit for a little while, and then be able to sort of churn, work off that frothiness, and then go. And that really lets you have a powerful move to maybe go up and challenge the highest highs. And that's certainly I think that is within striking distance. Right now, this is pretty hard to argue against the technical complexions here. So that's why if you go sort of to the other line that I put in there, which was the first line of this week's comments, third-year presidential cycle, bullish finish to the year, possibly back on track. Nothing means more to these street rats than their end-of-year bonuses. If you want to see how they can just artificially really and unjustly jam the market, look at the 19 and 21, and then look at how the market sort of in the new year gives it all back. But right, it's all about painting the tape. It's supposed to be illegal, but it happens almost all the time. I mean, so it is what it is. That's the reality of where you are. There's right. They're busy tracking down the small timers, making examples of them. But meanwhile, the biggest players just they laugh all the way to the bank that they own. Anyway, I would say you should probably at this point be ready to embrace this rather than fight it. Now, news, of course, could change anything. We said that last week. Get ready to embrace it rather than fight it, because even if you're a bear, and like I am in terms of the economic side of this, I don't see anything great happening. I'm really having a hard time still buying what they're selling. I hope, as always, to be wrong, because I want to see people retain their jobs and their homes and be able to have a better life. But I'm not seeing great things. I'll show a couple things in some other tabs. But I would say, look, as of right now, let's see what they do. You're overbought short term, but they've really swung a lot of things back in their favor. The big ones are in their favor, but that doesn't mean that there isn't problems. And that's what I'm also going to show. So the base camp thing we talked about, that is what could lead to the blow off top of the chocolate factory that we talked about. And that keeps the third year of the presidential cycle rolling. We also said you got to focus on the price action while not forgetting about risks. November provides stabilization for the end of year rally for bonus time and New Year's propaganda blitz. The outcome of last week was we got the instant sustained levitation. No worries. It was kind of like no worries. Another great Monday with no escalation out there in terms of the war or whatnot in the Middle East. And then the market was still predisposed in terms of conditions, but after arrest. So in other words, we were still really emerging from fear conditions, and the sentiment wasn't so wonderful. And there's a lot of people, again, let's say poorly positioned. So all that really helped after arrest. I thought the rest, just logically thinking about it, should have come earlier in the week, but really they put the rest together. It depends on what you look at, but they put the rest together really more in the middle to end of the week and then jammed into the finish. I mean, if we look at the SPYs, which is our main default, that's really what happened. But there wasn't a big burst. It was all kind of like rest in a very interesting way for the most part, and then burst towards the end. So that was really the outcome. There was very little give back. I think they handled it very deftly. You kind of do have a little bit of a base camp here that you bounced off the 50, and they could easily take this through. At this point, I would always say in the absence of big geopolitical developing over the weekend or by Monday morning, if the dollar yields are not jamming, I don't see why the gang, unless there's other news, I don't see why they're not going to continue to try to do this. I think they've got people off sides in a big way. Is another way to look at it. I would still be at DEFCON 3. Because I don't think they're out of the woods. Even though they're close to being, odds on to pulling off the end of the year scamper. I still think because they're overbought in the short term and because anything could happen with geopol, especially at a time like this, I don't think that they're completely out of the woods yet. And remember, we got that meeting coming up in the middle of December, which we'll talk about. So the current assessment is we'll do the tabs check. Let's do that in a better way right now. And those are right here. So let me pull these over. So all we will do now is really cover the fact that, look, rates are expected to stay here. So no big news really at this point is expected to be made between now and the Fed's next meeting in mid-December. If you look at how things shift going forward, right, they're thinking if there is going to be another pop higher from where we are now in the current target rate, it jumps up in Jan. So maybe they'll wait till Jan to do that, is I guess the thinking. But then after that, things start to sort of level off as to what could happen. Still favors probably here or higher a little bit, clearly. But when you get a little bit further out in time, it starts to show by May, it favors dropping a little bit from where we are, more so than heading higher. And so if we don't sit still in May, as of now, it looks like you have a much better chance, according to the markets, that you're down a little bit. So the cuts would maybe start happening then. If you just get we've been looking at yields, but I think this will suffice because look, this is where we are, right? If you look at it right now, you have backed off, you got stopped right, where you'd expect to. There is some resistance there. You kind of got stopped just shy of that, and they've been able to back things off from there. So again, this is why I'm saying it wouldn't be good if things start to move back up here. I don't think you don't want to see that. You don't want the dollar to be strong. But if they do start moving them back up, I don't think the market will instantly, unless it's screaming higher, the yield that is, I don't think the market will just fall apart instantly. It might be a good reason to take some of the overbought out of it, overboughtness out of it. But I don't think it creates like an insta crash because we go back up to, say, 4.85 or 4.9. It would probably have to really take out the highs to create the real panic. They did move out of the extreme fear, and you're back up with what we've seen over the past 2 weeks, right on time. This is actually one of your best 2-week stretches, I think, of the whole year. I think I saw that somewhere. So it all played out just about like you'd expect, which has to do with what we'll show on some of our other tabs in a minute. But the sentiment survey, what's interesting is you're the highest you've been in terms of bullishness. This is why maybe there's a question there is, can this be sustained for 6 more weeks in current assessment? The relief rallies work well when it should have. Can it be sustained for 6 more weeks? And the reason why is because you're getting back up there in terms of bullishness. You haven't been this high really in several months. You have to go back 3 months to be at a level higher than where we are now. And then when it comes to bearishness, you can see that the bears haven't been this low since the same time, right? We all kind of know what happened after July. We really started running into trouble. So this is really just a week plus into the next month that followed July, and that's when you had these higher readings. So they may have gotten a little bit ahead of themselves. That's why I've got that on the next line. The third year looks good, but did they get a little ahead of themselves? I think what they want to do is convince people that we're onto a new bull. I'm willing to go back and forth and fluctuate with whatever's happening. You probably can tell that from all the stuff that I say. You can tell that from the cocktail hours if you're there. But just, again, that's being ready to be kind of proactively reactive and say, okay, well, it looks like they're doing this now. And you're just participating in it and embracing the moment. You're not really saying this is my prediction. You don't have to go that far. You just have to say, this is what's happening now. And so I've seen them rally markets in the face of all things sane for extended period of times, many times, only to have a day of reckoning later. But they don't care about the day of reckoning, right? Because everybody thinks they're going to get out after the market pops. They think they'll be the first ones out or near the top. So that's why you kind of have to embrace this stuff. And that's why I would say trade the charts, trade the price action, and forget about the predictions, and especially right in the heat of the moment in the short term. that because it doesn't matter. It's what's working. It's what's working now for us. Anyway, I think they want to convince people of a bull because they like to. It's a game of misdirection, and if there really isn't a bull coming, the way to really play it is to convince people there is one. Let people bid prices up, distribute heavily into that, position yourself to the downside, and when the bad news starts to really uptick, then you start to get the market finally maybe reacting to that. And then you can, of course, cover later and start your accumulation after you've marked price down. It's the old market cycle. But they also want the holidays to be chatter, to be merry and bright. Ryan and I have said this, all the years through Market Rebellion Services, that if you aren't sure, I would give them the benefit of the doubt. When they get near a big American holiday, especially towards the end of the year, they really try to put this, let's have all the Americans getting together and discussing how things are improving, things are good, kind of keep that psychology of the consumer up there and investors up there. So this is nothing new from what I can tell, but it's been there really as long as I can remember. Anyway, reiterating, wall of worry still in place. In the face of all things, that could help bulls, of course. In the face of all things, we saw that XLK, XLC, we see that SMH and the Mag 7 are all still working. They're all still leading, and that they were able to do this with it, right? They were able to really jam stocks on just really having those work in a big way. That's all they really need because of those market caps. And so that's why I would again embrace it. I'm not turning into this bull. It seems like people hear certain things and they're not realizing it's like this is meant to be more balanced. It might be my own fault, but I'm not really turning into some kind of a bull. I'm just saying that everything's working for them at the moment, and we have to respect the fact that at the end of the year, this is what they typically do. We've been talking about that for a while. And so again, a little ahead of themselves, I think, right now, but if they were to reverse and hold, maybe pull back a little bit and then hold and go, you can't say, excuse me, I don't think you can say with a straight face that you'd be shocked by that, the way these guys roll in November and December. That's just what they, especially in this third year of the presidential cycle. So I do think maybe the AAI spiked too much. They're getting close to being able to pull off these end of year shenanigans, but I think, right, that's why it's challenging at the moment, aside from the fact that there's really a lack of participation in many ways. So they have a whole 1 month runway before they even have to deal with the Fed. The world is still full of risk and uncertainty, right? So that is a good reason to be disciplined and prudent, but it's also something that typically aids bulls if something doesn't become unwound, right? If things do not percolate that create problems for the market, those problems are just remain in the background. That tends to be what bulls love to work with. That there are problems that people see, but they're not affecting things at the moment. So again, I think the SMH example that I covered, that failure to fire is what I'm referring to. When you see this potential, excuse me, and they reverse that, that's what I'm talking about. You really not only should you be disciplined and say, I took my shot maybe at the downside, but it's over. But you've also got to maybe even think about, okay, well, this was really another egregious reversal right off of a new low. And they've had it outside the Bollinger Bands, and this is what they love to do. And remember, we're coming up on a bullish period that on the end of October, we even noted that for a while, tends to be the last sort of finish to it. You see a bottom put in. We talked about that, and they try to run. And I mean, it couldn't have been any more clockworkish in a way. It just sort of sometimes you're scratching your head for the way they pull it off. But that's why this is my best illustration as to why discipline works. And really should be mandatory. And now, like I say, you're at another instance of this. So don't, if you kind of sat it out, remember, this is looking like a possible, in certain areas, possible cup and handle-esque type pattern that everyone in the world will see before we really break out. And therefore, if you do, it could be that it could go. We all know sometimes patterns do work, but if the market gets overdone, just stays way too vertical. They break this thing out. They're super overbought at that moment in terms of whatever RSIs or whatever you're looking at. Remember, that's where they'll probably get a lot of short side capitulation, and they'll also get fresh longs who are buying new high buyers and people that are buying the breakout. So if especially right, if the yields are heading back up again and the economic situation still deteriorating, if you look beyond what some of these commentators have to say and look at some of the data, if that's all happening, yeah, you got to be real, in my opinion, you got to be really careful. I mean, you could have a repeat of very strong finish and then a rug pull to start the new year. We'll see. That's not what it calls for. It actually calls for where am I? It calls for this. It calls for the third year of the cycle is right here. And so we are right here. We're in November now. And remember, there's a little bit of volatility, but it stabilizes sort of versus October. And then as you get towards Thanksgiving, they really just like unleash the hounds, right? The bullish hounds, the bulldogs, or whatever you want to call it. They just unleash them and boom. In almost every year, but certainly right in this third year, which is green, you see that the performance is really very strong. Minor pullback, maybe like a third of the way into deck, and then it's vroom, vroom, vroom. And remember, next year is the second best year in the cycle, right? So this is their time to shine. And in the face of everything, right, they managed to pull the rabbit out of the hat again. They managed to save the market just in the nick of time, right? Like Dudley Do-Right practically. And they're back. They've got that back on track. And this is what they do in the new year. They do, this is the typical trace out. Good start, pull back. Everyone's wondering, will it hold? It does kind of hold trend above here. They start breaking it out and you go. But it's obviously not a great year. It's just a good year. This is obviously the best year. So they're holding it all together. That's what if you're a bear, this is, I think, what you're faced with, is that this is what typically happens. And that's why we've been covering this stuff for a very long time now, because we were coming into that sweet spot of everything. And it almost just, every time it was about to sort of fall on its face, they put the whole performance right back on track. It's just been, you could say, uncanny if you want, if you like that word. This is what I would check on. Now, if you want to say, well, have they really improved this market? This is the counterpoints. Are you really getting better? Well, look, even last week when they made all this magic, sustained the magic and finished on a high note, it really wasn't that pretty, was it? In terms of stocks above the 20 losing ground. You look at this, right? Here's your stocks above the 50 losing ground. Stocks above the 200, right? Losing ground. So it really wasn't all that wonderful in those ways. Now, I will show a few other things on that, but we may as well finish these tabs while we're here. Recession shadow indicator, trucking and freight are already in recession. If you look at what we see on the chart here in XTN, which I'll cover in sector situation, yes, that's true. I mean, we've been following this canary in a coal mine. We've been talking about this for a while now. And this, to me, was one of your big indicators to say that this is the rough stuff, is something doesn't make sense. And it did seem like it beat the market lower in terms of a race, but it also maybe helped get the market beaten down lower, because people were probably taking cues from there's something not right here. But transports have not looked good. There's a lot of stuff apparently in transport world and logistics that things are really bad there. Now, the problem is, right, I can't confirm this. I don't have the staff to confirm this. My wife might flip on me if I ask her to help me confirm this kind of thing. That's not what she likes to do on the weekends. But anyway, this is not something we can say is 100%, but it's something that maybe if you've got the time, you want to look into, because if this is really happening, and I think transports are really important, it's a big problem. And I think that's it. I don't think I wanted to show anything else here. I do think if you look at how a lot of these sectors are not participating yet that has to start improving if you're really in a new bull market. If you're really in a new bull market, it doesn't really look like one to me yet, because if you're in a new bull market, I want to know really why these sectors in SMH, which are all share names, by the way, I want to know why they're the only ones, along with whatever the Mag 7 is in, they're really the only ones that are really acting that way. And I think this, honestly, to me, is more about the nuts and bolts or plumbing of squeezes and other things like that. It's to me, it's not real. This is not how people that are positioning for the long run buy. They don't just chase stocks relentlessly. That's not typical, right? You'd rather be a scaled back buyer where let it come to you and you get great prices because you plan on being in for a while. And if you can let the market come to you and get even better deals as a long-term investor, get your cost basis down, that's what you want. But if you look at something like the IWM is the clear example, right? Look at this. I mean, your small caps are acting very poorly. Look at the week that they had. To me, this is not where the typical bull market. And remember, I'm saying not to fight it as a trader, but I'm just saying it's really hard for me to buy a lot of what these guys are selling. If you look at the equal weighted, as this has become really popular because of how narrow these rallies have been at times. If you look at the equal weighted S&P, that's very similar to IWM. And if you're wondering what are these little notations, these are just reminders for me to ask you, do we have a higher low put in? And if you do, maybe, right, they're going to start being able to break this out and they will get participation from more stocks. They will get more of these lower tier, smaller companies participating. So here's the growth, IWO, Russell 2000 growth, right? Does that look like a bull? Does that look like a bull market? The IWM, just the straight up IWM, does that look like a bull market? Is this really how smaller companies should be behaving? So I think you have a unique situation here. And I can say with a straight face that the Mag 7, the SMH, if they are able to hold those things above, churn a little bit would be best. But if they're able to hold these above these breakout levels, I don't see why, again, assuming the news is neutral between now and the end of the year, I don't know why you would say, no, this thing can't stay up there. It can't go higher. They just left a consolidation. They consolidated for months. There was a corrective consolidation that was in place for months. And it took them really from the top up here, you went for about three to 3.5 months. And now, right after kind of correcting and consolidating, they're trying to break it out. And it's got a big picture. If we look at it on the weekly, it's got a big picture my apologies. It's got a big picture sort of cup and handle look to it, which we all know, right? That is a pretty prominent pattern at times. And it's also one that has a pretty good track record when it's been measured to my knowledge by folks that have done, historical measurements on how these have played out, especially on the bullish side because of the market's bias of wanting to move higher over the course of time. So in the face of everything. So there's a lot of, as we've discussed, right, there's a lot of chicanery going on. It's getting worse and worse at companies, but with buybacks kicking in, it's getting worse at the government too, obviously. But you just can't, right? You've got to acknowledge the fact that, look, this thing broke out of here. Can it really break out and go? Which would be somewhere near, I guess, 161 new high. So if they continue to push things, like, you've got to be able to say, like, this could really break out. And you've got to, if you get there in an overbought state, you've got to start thinking to yourself, will this thing be able to continue from here? If you do get in, you've got to be an aggressive roller when you're already in an overbought state. That's how I handle it. That's how I think about it. You will have resistance up there in a couple different forms, flatline, and you'll be under that support line that's very clearly drawn there in blue. So these are your leading sectors. So you've got the big dogs, the stocks of the moment, the AI stuff that's driving a lot of this stuff. that all looks good, and you don't really want to fight against it yet in my book. They're on the verge of even improving those charts further in my book, other than the fact that they are short-term overbought. You've got a, let's see, 76 reading on the 2-hour RSI in this SMH, for example. So there's kind of like the big picture look. If I show a couple more things, a lot of sectors we saw did not participate in this yet, but there's a lot of sectors that are potentially putting in higher lows that could participate. So just remember, I've got those marked up. I'll cover them. There's a lot of arrows that you'll see in here that I dropped in, or lines, and a lot of these things are doing that, right? They're maybe putting in a higher low, and maybe that'll let them potentially break out through resistance more. So keep that in mind, that it's, even though it looks bad right now, and there's a really, when you look at it, there's a lack of participation, it's not as bad. And I'll show you another thing that would say it's not as bad, right? Where is that? Where is that? That's not it. I want to bring this over to the right chart. Is that it? Yep, this is it. So what I'm going to do is bring this over here, and let me get, I'll just get us back on the cues, for example. It doesn't really matter, but the indicators are going to stay as they are. But where was I? SMH. I think I was in SMH on that. Let me go back. I might have to go back there to keep my lines. I hope it kept my lines there. Let's see. Like, I had lines drawn for us on here, and it didn't. It looks like it dumped my lines on me. That's kind of frustrating that it dumped my lines just because I left and went to cues. But it does appear to have done that. Okay, well, let's just talk about it. I don't want to waste everyone's time redrawing these lines, but here's the reality, right? Here's your McClellan oscillator. You really can't say, right, in my mind, like, you can see that this was very forceful. And that's one reason why I said last week when I was traveling on Cocktail Hour the week before, I think I made it clear that I would respect what happened here. I wouldn't just dismiss it, because this was a real leap. They actually have improved things, and your advanced decline, the cumulative advanced decline line, and I have to do this. It just frustrates me that these are gone and I can't really show you what I mean. Come on. Why did it dump my lines? I don't get it. I don't get why that happened. There's something I'm missing here, but you can see that there is kind of like breaking through that resistance line that I drew on there, finding support back on there and trying to go again. And that's, again, this to me is, this is the textbook stuff that guys, and I guess gals, have drawn up for a long time, right? They really want to see that kind of behavior where you get that overboughtness or overdoneness out of it, and then you go. And here's another one. Here's the McClellan summation index, and that also had a trend line on it that Thinkorswim disposed of somewhere. I'm not sure why it did that, but anyway, the point is that this is improving. Now, this is a slower to respond indicator, kind of like, but you can see that that's moved past there. This level is higher than this level, right? And you can also see on this McClellan oscillator that you were showing better McClellan oscillator activity near this low here in SPY. They have pushed this up. It's above the 0 line. You're holding there. It looks to me like they're on the verge of trying to take another run after cooling it off for a few days. But I'm not trying to use this as predictive material. What I'm really trying to convey is that there's good sides that I can argue from some of these market breadth views that I have, which this is just but one. And on the flip side, right, the percentage of stocks above this and that took a hit. We also know that there's relatively narrow participation to this point. So that's why I started out really by saying save your time, because I think what you have to look at is that, just kind of wrap things up, I would say, you got to continue to focus on your price action. You've got to realize that there's a wall of worry in place. There's plenty of manipulation in different places, but I said again, however, see 1A. 1A of the bottom line this week is you have to focus on price action, right? Because these guys are really they're in the cockpit for finishing the year the way that they want to. All they really have to do is keep the pressure on, not overplay their hand by getting too overbought, keep the pressure on, and hopefully the news cycle cooperates. And then they're probably going to be able to put the squeeze on, because people that were expecting this to really crack are not only losing on the upside, but they're also going to be lagging performance of people that bought, like maybe recklessly, but bought and have, at least to this point, been right over the past 2 weeks. So you've got the fact that a lot of things still do not look good, and that the equity market, to me, economically speaking, still continues to whistle past the graveyard. But if you look at all the things we saw with equal weighted, you don't get the sense that there's this really great bull market happening the way a lot of people are arguing, and the way that the Mag 7 and are acting, and some of the sectors we looked at. But that's enough, right? We've seen it time and time again. Just those three that we talked about, Mag 7 and the three sectors of XLK, XLC, and SMH, as long as they goose those, it really won't matter, because that's where the weightings are. So just be prepared. So if you wanted to really kind of wrap it up and say, what's your bottom line? You have to admit that spiders are on the verge of breaking out, right? But they probably have to get through 446 and not be too overbought to have a little more clearance. Qs are ahead of the pack, and they're overbought in the short term. It would be better for them to dawdle around a little bit longer. But again, I'm not so sure they'll do that. I think you still have to keep your eyes on DXY, dollar DXY, and TNX on Thinkorswim. Even the blue chips are not looking wonderful relative to SPYs and Qs, but you can see they too are about to put the 100 to the downside. That's the 100 SMA that they're at right now. They're above my resistance line, and they also did a great job of sort of sidewaysing and then tried to put this other pop together. Now this is super vertical, but we've had other super vertical phases, right, in things. So we could even show it probably here without, and I don't like this chart. I really want to use this one. A lot of my indicators are missing. Thanks again, Thinkorswim, on that one. But this is weekly. Sorry about that. Let me get this back to more of a longer term daily. And you can see that here's your diamonds, and with more of a better look, right? There's your daily look. And they really don't look that great, but they're also on the cusp of leaving this corrective consolidation, right? Maybe. So you got to respect that at the moment. Again, they are probably overbought near 70 on your 2 hour right now. And that to me means they still have upside if they want it. But you've got to, in my book, at least, you got to be a pretty aggressive roller, and you don't want to get caught overstaying your welcome. And then your IWM is still looking pretty bad. But much like a lot of sectors that have been left behind, the reason why this arrow is here is to remind me to ask you, is it possible that we see a higher low? And if they have a higher low, at least that's something to build on. They start taking it through this resistance line that I changed to blue. You get up through 170, and they could be working their way up towards the 50, and then treat it incrementally. But that would probably, right, I think the stretch right now between the small caps and these behemoth stocks and tech is maybe closing in on like record stretch, where these have never really lagged very lag behind by as much as they are from where the Qs are, and they haven't lagged behind by this much very frequently. You're talking the stretch between the Qs and the IWM performance of maybe like you see this maybe once every 5 years, this kind of a performance lag or disparity. So this is, again, not really indicative of new bull market stuff in my mind. But another thing I would say, kind of I would part with too, would be that you've got to keep an eye on this discretionary, right? Because the consumer's the big thing. Staples are one thing, sure, but if the consumer stocks really start to act better, it's another sign probably that you got to give the bulls their due. So if you see this thing taking out 163, which is not that far away, you're talking about 1%. The biggest hurdle after that's going to be the 100. And then after that, there's nothing there, right? There's really, there's flat line resistance here and there, but there's no SMAs, right? There's no big, in my mind, resistance line that's in their way. So this space between 165 and sort of 170 is pretty open, kind of a mini clearance zone is the way that I've always talked about that. And so to me, right, that's there with this higher low. They just need to do a little push, take out these highs, really get above 163-ish, then attack the 100-day at 165 and change, and then maybe go. So things could change quickly. That would be a good canary in the coal mine. I think it has been very good. I think you should keep your eyes on that in addition to what the other symbols I already mentioned. And again, you can take your cue from that. Transports, a lot of the sectors have a similar look where there could be a higher low that they're working on. And that would maybe that a lot of these things would sort of join the end of the year rally party, even if it doesn't make sense, even if it's unjustified. But remember, the first thing you need to really, one of your first signs, right, that you really want to see is if there's going to be a trend change is, right, something like this, a possible higher low. I am not calling it that. I'm just saying it's possible that this could be a higher low. And there really doesn't have to be a lot of energy expended to get back to where resistance is waiting for it and go. And there's room to the 50 there too. So these are two important sectors that keep your, I think especially keep your eyes on those two, but certainly discretionary if they get that going. Other things I'll talk about in sector situation. But I think that's going to be a wrap for now. It was kind of a all across the board thing here, but I kind of warned you up front that there's a lot going on. There's a lot on both sides. It's just not an easy time to make, I think, stronger predictions or leans. You're at a very tough juncture, and there's a lot of arguments that can be made pro and con. So with that in mind, I think you've got to be smart, be opportunistic, take what's there, stay prudent, stay disciplined, watch the key things like we've talked about. I think it'll be fine. And we'll see soon enough, I think, if they're able to keep this going or it gets derailed, right? And then we have to see by what extent it gets derailed, by what extent it's able to go. But you're at a very tough juncture. So I do hope, despite all that, that something I share with you in this video helps you out this week or some week in the future. I want to thank everyone for tuning in. Have a great finish to your weekend and a great week ahead.